Is your tax-free savings account actually maximizing your money? Canada. I'm talking specifically about using Wealthsimple for your TFSA, which is what I personally use. It's an incredible tool, but you need a solid strategy to ensure you're getting the absolute most out of that precious tax-free contribution room. Over the years, I've refined my approach, and today I'm breaking down the 3 best Wealthsimple strategies to maximize your TFSA. 1. Maximize your contribution room early. This first point is the foundation of any great TFSA strategy, regardless of the platform. Contribute as early and as much as you can, every single year. The power of time. Remember the saying, time in the market beats timing the market? When you contribute on January 1st, your money gets the entire calendar year to grow tax-free. This is crucial for maximizing compounding. An extra year of tax-free growth can be huge over the long term. My experience, lump sum versus dollar cost averaging. I used to think I had to wait for a dip, but now, I contribute my full annual limit as a lump sum on or near January 1st if I have the cash available. If you can't do a lump sum, set up a pre-authorized contribution, PAC. Wealthsimple makes this super easy. Set it to transfer funds every paycheck. This is dollar cost averaging, and it protects you from market volatility while ensuring you are consistently contributing. 2. Strategic investment choice, high growth assets. To truly maximize your TFSA, you need to put your highest expected growth investments inside of it, because all those gains are completely tax-free. Growth over income. The TFSA is the ideal home for high-growth assets like broad market equity ETFs, VFV, VGRO, or XEQT are popular choices in Canada, or individual stocks you believe will have massive growth. Why? Because you will never pay capital gains tax on that growth. Keep income-generating investments like bonds or high-dividend stocks in a non-registered account or an RRSP where the tax treatment might be more favorable. Wealthsimple managed versus self-directed. Managed investing. If you're a beginner or prefer a hands-off approach, choose a high-risk portfolio with Wealthsimple's managed investing. This portfolio will be heavily weighted toward equities, giving you the best chance at high growth. The rebalancing is all done for you, which is a big time saver. Self-directed investing. If you are comfortable choosing your own investments, the self-directed account allows you to buy thousands of ETFs and stocks commission-free. I personally use this to hold a core portfolio of low-cost, globally diversified ETFs like XEQT for maximum growth potential. The only cost is the ETF's low management expense ratio, or MER. 3. Minimize fees and foreign exchange costs. Fees and hidden costs are the termites of your portfolio. They slowly eat away at your growth. Wealthsimple offers some great ways to cut them down. Focus on low MER ETFs and the self-directed TFSA. Always look for ETFs with a low MER management expense ratio. An MER difference of just 0.25% can translate to thousands of dollars over a few decades. The USD account hack. For active traders, if you're buying US stocks or ETFs, which I use for my TFSA, you normally pay a 1.5% currency conversion fee every time you buy and sell. The best strategy here is to pay the $10/month for a Wealthsimple Plus subscription to unlock the USD TFSA account. This eliminates the 1.5% FX fee on every trade, making it a huge cost saver if you're trading often or in large dollar amounts. For me, the savings on one large trade easily cover the monthly fee. My personal TFSA strategy summary. If I had to boil my strategy down to 3 simple steps I follow on Wealthsimple, it would be this. Lump sum contribution of the annual limit in early January. Invest 100% of the funds into a single, globally diversified equity ETF, like XEQT, for maximum long-term growth. Use the Wealthsimple self-directed account and leverage the USD account to minimize currency conversion fees when buying US-listed ETFs. This disciplined, high-growth, low-cost approach is what has helped me consistently maximize the tax-free power of my TFSA on Wealthsimple. With that said, thanks for watching, and until next time.